Well, good afternoon. Thank you for joining us on Power Lunch. This is Bloomberg Quint, and I'm Menaka Doshi sitting in for Ira Dugal, who's at the RBI, and Harsha Subramaniam, who's in Delhi for the India Economic Forum. So I'm afraid you're stuck with me this afternoon. Let's take a look at the top stories. The Nifty crossing 9,900 for the first time since September 22nd. Energy and pharmaceutical stocks are the ones leading the rally. HPCL is one of the top Nifty gainers today after the government cut duties on petrol and diesel. The RBI is expected to maintain status quo on key rates today as inflation edges towards its medium-term target. The Indian currency strengthens against the dollar ahead of the RBI policy, in line, though, with Asian peers. All right, let's get first a quick check on what's going on in the markets this afternoon. They're gaining for the fourth straight session with benchmark indices about 0.5% or more higher. We've seen a steady climb into the green as the graph shows you, and Neeraj is here to explain what's going on with the markets led by Sun Pharmaceuticals, which is having a really good day today.
Yeah, so pharma is at the forefront, yes, if not in terms of contributors and at least in terms of the headline numbers being higher. I think all pharma counters are doing very, very well for themselves, and some heavyweights are participating in today's session as well. So banks may not be doing that, but if you just bring up what the contributors chart looks like, you will see ITC right up there. That forms a part of a quadrant of stocks which are actually contributing in a meaningful way to the markets moving up, and lack of big contributors on the downside. The top contributor would be, it is HDFC Bank, which is just contributing about a couple of percentage points on the downside. So absence of losers and strong moves by a couple of heavyweights and pharma combined is leading to this really strong charge. But yeah, you're right, pharma is really at the thick of things. Sun, Aurobindo, Reddy's, mid-sized names. I mean, you can't take the sheen away from Natco. That's up 20% and has stayed up 20% throughout the trading day today. So, yep, pharma is having a field day in trade. That aside, I thought there are some pockets which are doing well. So, of the last few days, the 3 days of this new series, October series, we've had pockets of performance. And by pockets, I mean corporate groups doing really, really well. And it's a Sanjeev Goenka group today, which is in the limelight. Well, maybe even yesterday. But you look at Philips Carbon Black, you look at Saregama, you look at CESC for that matter, the mothership. All of these are doing extremely well for themselves in the session today and over the last few days. So good going out there too. Volumes a bit thin, but you probably expect that the markets would be a bit, you would expect that the markets would be a bit wary ahead of the policy. You never know what will come in. Headline numbers don't show that. The volumes though could have been a bit better. The third day of the new series, and we are at subpar volumes as compared to what we usually get. So maybe the market is just playing it light ahead of this thing, though, as you said, the headline numbers are not showing that.
Yeah, it's interesting, actually. If you really want to see what the buying is coming in, look at the sectoral indices, because as Neeraj pointed out, you'll have the Nifty Bank, I think, barely up in the green, very, very marginally so. The pharmaceutical index, though, that's Nifty Pharma, is up almost 2%, and I think that will show you really where most of the buying is coming through. The headline indices, as we've pointed out, are gaining about 0.5% or so. Now, pharma has been in the news all through the course of this morning, and that's mostly because of the development around Natco Pharma and Mylan Pharma. Neeraj, hang on, because we're going to bring in a couple of more market voices today. So both these companies are benefiting thanks to a US FDA approval for their multiple sclerosis medicine, that's the MS medicine. Darshan is standing by with what brokerages make of this development and how much of a benefit it might amount to for Natco.
Well, yes, Menka, a lot of brokerages have come out with notes and all of them are positive at this point of time, given the fact that this approval comes in, at least for the 40 mg, comes in much ahead of estimate. Now, for Jefferies, for one, says that they were building a second quarter to FY19 launch or an approval for this 40 mg, and that actually is coming down, which means that it's almost 9 months ahead of schedule. They are saying that could add almost 75% to FY18 EPS and 12% to FY19 EPS, given the fact that there will be competition later. And finally, they believe that the Natco could be the only generic in the market for the 40 mg in the next 6 months. So they believe that this 180-day exclusivity will come in. Axis Capital is also indicating that they believe that Mylan may launch the 40 mg at risk, but they believe that revenues of almost $25 million could come in for Natco for the 20 mg in the second half, and 100 million if they launch the 40 mg in the second half. And for next year as a combined, they believe that Natco could see another $100 to $200 million that could come in because of this move. Finally, Motilal Oswal is saying that they believe that a $350 million sales potential could happen for both Mylan and Natco in the next 3 to 6 months. And Natco share will be 1/3, so they believe a potential of almost $100 million coming in. Aquarius is saying that $25 million profit from the 25 mg launch, and if they launch the 40 mg also, that could add in anywhere between $90 to $100 million. So overall, big numbers being spoken about for Natco. The counter up almost 20%, indicating that the market is extremely bullish. It was a drug for which the approval, it was years and years everyone was waiting for this approval, and finally it's come, and that is why the counter is reacting the way it is.
All right, 20% up there on Natco Pharma, as you can see. I'm going to go a bit off script here, Darshan, and ask you whether there's any news propelling the Sonfarm stock higher, because that clearly is by weight and size the biggest gainer right now on the index besides ITC.
See, I don't know about Sonfarm. There are a couple of news that are floating. One of them obviously is, now since that expectations of the US FDA being very proactive, like how the approval for Natco came in and how the re-inspections happened for certain other plants. The market seems to believe that FDA woos for Sonfarm will probably end with, they anticipate that the Dadra plant would be cleared very soon. That's the general buzz that we are hearing. There's no news on Halol, which is the big plant. But also Dilip Sang, I just wanted to add that Dilip Sangvi holds a stake in Natco, nothing to do with Sonfarm. He is richer by close to 100 crores today because of the 20% move.
All right, thanks very much for that, Darshan. That's a view of what's going on in the pharmaceutical space. Now, this one doesn't show up in the top gainers or losers, not at least on the frontline indices, but it is one of the stocks that is moving big today. Gujarat Narmada Valley Fertilizers and Chemicals, better known as GNFC, hit a record high in today's trade. The stock rose as much as 10.6% after the company hiked prices of the organic compound toluene diisocyanate, or TDI. Yash Upadhyay is standing by with more details on what's going on there. Yash.
Good afternoon, Menaka. So the toluene diisocyanate prices or the chemical prices have seen a sharp increase in the last couple of months. They've gone down from the lows of 22,500 renminbi per ton in July to 36,000 Chinese renminbi per ton as of September 29th. So this has turned into a big positive for the company, given that the prices have seen a significant increase of as much as 60% during this 2 months. This has also come on the back of strong demand in the Middle East and Northeast Asia regions, coupled with supply constraints in the other markets. So with that, analysts have told us that the company has increased the prices with effect from 1st October. However, we could not confirm the same as the management wasn't available for comments.
All right, fair enough. So that could be one reason why that stock is up today in trade, 7%. Those are the key standout stocks in trade. Before I let you go, Neeraj, market poised any which way for a rate cut, or will it be a big disappointment if one doesn't come through, or is it baked in already?
Well, not coming through is baked in. If the commentary is hawkish, that would be a big disappointment. I think the market is working with hopes of a dovish commentary.
And its estimates, the MPC or the RBI's estimates for growth.
Yeah, so
in the remaining part of the year.
Yeah, there's also this outside chance, though not quite sure the impact thereof, but I think somewhere in between the last policy or in the last policy and between then, they had hinted that MCLR was not quite as effective as a tool.
In the last policy itself, they had hinted.
And whether there is some tinkering there, whether they're outside the policy, that's something that we'll watch out for as well.
All right, so that's how the stock markets are poised. Let's take a look at what's going on Main Street. We've got Ira Dugal standing by. You know the RBI will announce its bi-monthly policy later this afternoon at 2:30 to be precise. Now the Monetary Policy Committee is faced with, as always, a dilemma. Slowing growth on the one hand, and on the other, inflation starting to pick up. You've already got a slightly expansionary fisc that's going on right now, most of the fiscal deficit having been consumed, and these are the many dilemmas that the MPC is facing. Keeping that in mind, does the RBI have room to cut rates? Ira Dugal, like I said, is standing by at the RBI with more.
It's a bright, hot day here outside the Reserve Bank of India, and pardon the bad pun, but I suspect the Monetary Policy Committee debate inside this building is equally heated. Now, last time around when we were here 2 months back, the debate was around whether low inflation is the new normal. This time around, the debate will be about whether low growth is the new normal. We all know that the 5.7% GDP growth number has shocked everybody and got them to pay attention to the growth scenario. The question being debated is whether that 5.7% was an aberration due to one-offs like demonetization and GST, or is it reflecting underlying pain in the economy? If the MPC's judgment is that there is a weakening of demand conditions and that the output gap has actually widened, then the MPC can choose to go ahead with another interest rate cut of 25 basis points. That is certainly not the consensus view in the market. The consensus view in the market is that you will not get a rate cut this time around. You may get something in December if growth readings remain soft. But there is an outside chance, and I wouldn't rule it out, that if the MPC feels that growth needs urgent attention, then they can deviate from their primary task of inflation control over the short term and bring in one more 25 basis point cut. It's an entirely separate debate as to whether that 25 basis point cut will do anything, but at best it might be able to actually give a little bit of support to sentiment, which also has been flagging. Apart from that, of course, any comments on the fiscal scenario will be important to watch. The bond markets in particular have been worried about fiscal slippage, and then you got the excise duty cut from the government on Tuesday. That has only added to concerns that perhaps you will not meet the 3.2% fiscal deficit number. How the MPC chooses to view that will be important. Some of this detail will actually only come through in the MPC's minutes 2 weeks from now, but you will see the statement from the MPC reflecting some of these concerns. As far as inflation is concerned, well, it has started to normalize close to the RBI's benchmark forecast of 3.5% to 4.5%. There is an added factor of oil prices starting to rise. There is an added factor of a weaker currency. All of that will be reflected in the statement. Now, apart from the rate decision, there is also the decision on the stance, which is awaited. Again, the market is not expecting the stance to go back from neutral to accommodative. Should that happen, it will be a huge positive surprise for the bond markets. I just want to close off by saying that this is the October policy review, so you will get the monetary policy report. So for the aficionados, you will see a lot of attention being paid into the dynamics of growth, the dynamics of inflation, and that will be interesting to read as well.
All right, Ira will be joining us at 2:30 with more insights on exactly that fine print, which is what the RBI and the MPC make of the current state of the economy. We've got special programming lined up for you through the course of this afternoon. But even while we talk to you about that, let's get a quick check on the money market. Shraddha standing by with that. Shraddha?
Manika, today it's going to be a day where words are actually going to be more important than action, because inaction is what the money markets are really expecting. So if you look at what are the key 2-3 areas that bond and currency traders are likely to focus on with respect to the tone and commentary coming in from the RBI. One, of course, they will look for any change in RBI's stance for the monetary policy. In August, they had retained their neutral stance. So we will have to, bond traders will watch if, the RBI says that they're open to at least yet one or more rate cuts in FY18. Second, of course, it will be interesting to see how RBI weighs the inflation versus growth balances given the slowing growth. Now, traders will focus on RBI's assessment of the extent of the slowdown in the growth. This is what traders are going to be watching out for. There is a possibility, the market participants are saying, that the RBI will revise its growth forecast for the year after multiple downgrades for FY18 GDP numbers have come in. And any comments on the impact on any possible fiscal slippage is yet another thing with the bond markets will really be looking out for, because about 2 weeks back, when there was this talk of a fiscal stimulus, that actually had spooked the bond markets back then. So just broadly, let's see how the bond and the currency markets are doing today. Before that, just if you look at the bond markets and how the yield on the 10-year bond has done since the last policy, which is since 2nd August, the bond yields have moved up by 18 basis points. Today, the yield on the bond is trading about 2 basis points lower at 6.63%. And broadly, today they have managed to stay in between that 6.62 and 6.64% range since the start of trade. When it comes to the rupee, it had weakened by about 2.5% against the dollar since 2nd August. That's the last policy, even as FI outflows continued from equities. And today, the rupee has climbed about 18 paise to 65.32 against the dollar.
All right, Shraddha, thanks for that. Keeping an eye there on the money markets. Now, like I said, stay tuned to Bloomberg Queen for the complete coverage of that monetary policy announcement. We have a whole host of experts lined up for you through the course of the afternoon. Jayesh Mehta of BofA-ML, as you can see, Rajiv Ahuja of RBL. We will also be joined by DK Pant, the chief economist at India Ratings, and a whole host of other guests to take you through the fine print of the policy announcement. Let's change tack now and move to corporate India. It hasn't really been smooth sailing for a Apollo hospitals over the last 1 year, what with the government imposing caps on stents as well as knee transplants. The medical fraternity is also preparing for more regulations. So Darshan Mehta is back with us today because he is joined by the Managing Director of Apollo Hospitals, Sunita Reddy, to talk us through what the environment is for Apollo. Darshan, can I toss it over to you? You've got Sunita with you?
Yeah, we have. So basically what has happened is the fact that there was this Kotak report that came out indicating that there were a lot of issues as far as Apollo hospitals are concerned, regulatory issues. So what we want to do is we want to speak to the management. Good afternoon, Sunita. Thanks for joining us. The first question is a recent brokerage note points out to several concerns. The first being, regular headwinds like regulatory issues in terms of pricing cap, high capex, declining growth trajectory in the core Chennai cluster, etc. And they believe that this will continue over FY18. Do you agree that such headwinds will continue for your company?
I think we've met with some challenges for the past 3 quarters. To wish it away is not correct. But clearly there has been, government regulations that has impacted not only the healthcare industry, but industry as a whole. And all of us know that, the impact of demonetization, where there's 20% less cash in the hands of a consumer, has impacted everyone's both top line and bottom line. And for us, 55% of our patients were cash paying patients. So definitely that 55% has been hit. And because of that, we were not able to grow at the pace that we traditionally grew at. But I think growth is coming back because the way that digitization has helped to improve commerce and access to our facilities, I think this growth will definitely come back in the next quarter.
Okay, how big are these regulatory challenges in the form of pricing caps on stents and now knee implants that you are faced with currently?
These challenges are, because they were unexpected challenges in a sense, but I think we do have a deep understanding of these challenges now. If you look at healthcare in general, earlier we would price a component and leave out the procedure. It was an anomaly that existed. Now, whatever the government might do in terms of putting a price cap on input costs, which is the material, I don't think will really affect our margins going forward into the future, because we are now repricing the service. So just like a hotel or if you would fly from one place to the other, you would buy a ticket and the entire service would be priced. So I don't think we need to focus on the input costs and get overly concerned about input costs. We've crossed that bridge.
Okay, so going ahead, do you anticipate capping of prices of other medical devices, let's say over the next 18 to 24 months?
With the private sector actually handling 51% of India's healthcare, I think it would not really help the government if they were to come out with price regulations for the healthcare industry, because everyone knows that the disease burden and the demand supply gap is so huge in India that they need to encourage the private sector to actually get into the space. And as long as there are no new beds coming into the system, then we're actually, there's actually nothing that's being done for the healthcare sector.
Okay, the report also says that the company's turnaround is basically on your ability to turn around Spectra. When do you see this happening for the company?
It should take another year for that to happen. And the reason that I say this is that if you look at Apollo today, about 30 to 40% of our surgeries are daycare surgeries. So I think we have a deep understanding of how, the patient journey. We understand the interplay between technology, the skill of the doctor, and what the consumer wants. So clearly, people would like to go into a smaller format store rather than go into a large hospital for a lot of these surgeries. And today we're doing open heart surgeries with robots. We're discharging patients in 48 hours. So clearly these are formats of the future. We have under that AHLL 4 formats. So I think that these are definitely something that they're more consumer facing than a pure hospital play.
Okay, as far as your Chennai hospital is concerned, there is a declining growth trajectory in your core Chennai cluster. And if you add the upfront cost for the Navi Mumbai hospital, then free cash flows will continue in the negative territory. When do you see these easing?
Next year, you will see our free cash flows much better. Chennai is a cluster. There is a lot of focus on Chennai, but I think we need to understand that our other clusters are equally important. Bangalore is very important. Hyderabad has grown at 17%. Chennai was already large, where we had a market share of, we continue to have a market share of 20%. And we maintain and we grow this market share because we have different formats of care in Chennai. And clearly this is working out really well because the daycare centers, the cradles, everything have started to do really well in Chennai. So if you don't see just Chennai, if you don't focus only on Chennai hospital, but you look at our market share in the healthcare space, clearly we are the market leader in Chennai. And the good news is that Bangalore and Hyderabad and now New Bombay, all of them are moving in that direction.
Okay, let's talk about the other markets. How are you seeing growth in the markets outside of Chennai, and which hospitals are seeing traction currently?
Clearly in Hyderabad, we're seeing we're seeing an improvement in the revenue mix. We're seeing the RPOB is growing and occupancy is also picking up. Bangalore has grown. Today they have close to 15% market share. With 3 hospitals in Bangalore, I think that the opportunity for growth is tremendous, and we can get to 20%, and we can look at a much richer case mix and better RPOB. New Bombay, which we just started, less than 2 quarters, has started to improve significantly. Today we have 120 beds occupied out of 150 which are open now. And going forward, I expect to see that the losses diminish from New Bombay. So overall, the bottom line will look much better.
Okay, thanks so much, Ms. Reddy, for giving us a perspective. Minka, that was the management of Apollo Hospitals. What do you have next for us?
All right, we've got an interesting conversation today with Srei Infrastructure Finance's wholly owned subsidiary. Okay. And this is a nice, interesting way of testing what the mining and construction market is looking like. So that's what we're going to get on to. The Srei Infrastructure Finance stock was up about 3%, now up about 2% or so. Let's tell you exactly what the news there is. An MOU has been signed, like I said, by a 100% subsidiary of Srei Infrastructure Finance. The subsidiary is called Srei Equipment Finance, and this MOU has been signed with Tata Motors to finance Tata Motors commercial vehicles. The focus of the venture will be on construction and mining tippers. We're joined by Devendra Kumar Vyas, the CEO at Srei Equipment Finance. He joins us on the phone line to tell us a little bit more about the partnership and the size of this market. Good afternoon, Mr. Vyas. Thank you for joining us on Power Lunch on Bloomberg Quint. Can you explain to us the size of the opportunity that you're looking at through this joint venture?
Thank you very much. We have been into financing of construction and mining equipment. The market size for construction equipment is approximately 30,000 crore, and the tippers, the construction tipper is around 12,000 crore. So there's a market size of around 42,000 crore for construction and mining equipment. And we have been having around 30% market share in this equipment financing.
What do you hope to gain through this joint venture or through this MOU with Tata Motors?
So this is an MOU where we will be the preferred financier for financing of the tippers. I think what we will get the benefit of getting strong product range from Tata Motors, where we'll be financing the various range of tippers, which will give us kind of incremental growth volume. We will be looking at a sizable sales of the tippers of Tata Motors by financing them. And under this arrangement, we'll also be creating, we will be financing through leasing of vehicles, which will be a new product for tipper industry. And we'll also focus on covering the life cycle solution. It's not only just to finance the new tippers, but also focus on the total life cycle solution of the tippers to our customers. And Tata Motors will leverage from our industry knowledge and leadership position, and also the kind of a customer base which we bring, because since beginning I think we have asset base of approximately 100,000 today. So that will be a good kind of, they can leverage on these large customer base from us.
Mr. Vyas, can you give us a sense, because one reason for why we wanted to speak to you is, of course, this MOU that you've signed, which I'm sure is a great business opportunity for you and Tata Motors. But equally, speaking to you gives us a sense of how the mining and construction sector is doing. The last economic data suggested that the sector was growing very well, 5%. This was the IIP data that was last released. What's your outlook right now on how this very critical part of the economy is doing right now?
So we see a very good growth on the road sector. The construction sector is doing well in terms of road particularly. So the growth drivers are road sector, the irrigation sector, and a bit of urban infrastructure. They are doing very well. On the road, we see good demand for the road equipment, construction equipment. And today, and we saw the growth in this year also. Since the last financial year, the growth started picking up. And we see the growth to continue. The last quarter, we have seen the growth also. Few of the equipment has had a growth of approximately more than 20% in terms of volume. In mining, the contract mining is doing very well. Contract mining in terms of Coal India and the subsidiaries, we see a lot of new tenders coming for the contract mining. And a good amount of growth in terms of mining equipment has been seen in last around 12 months to 15 months. And we see the growth to continue in these sectors as well.
So you've got assets of roughly 24,000 crores under management at this point in time. What kind of growth are you expecting in the second half of this year? Are you expecting a pickup in mining activity? Are you hoping or pinning your hopes on that? Is that part of the reason why you've timed this MOU right now?
So we had the first quarter, we had a growth in disbursement of approximately 44% in our portfolio, around 23,000 to 24,000 crore of assets under management. And we expect the market to grow at around 20 to 25% this financial year. And since we are the leaders, so we expect to grow at the market rate in this financial year, both in the road equipment, the construction, mining equipment, both road, mining and irrigation. These three sectors are going to give us the growth. And this MOU which we have signed is at right time, because most of the tippers which I'm talking about are very relevant and they'll be used for these industries only, and these industries are growing well. So this is the timing is very right, so that we can really capitalize on this opportunity by both the organizations.
Mr. Vyas, you have a year to the ground, so I'll put this final question to you. The macroeconomic data is terribly confusing. While there are some green shoots when it comes to consumer demand, etc., the overall picture doesn't look very pleasant. But you seem to sound very optimistic. To you, is this economy slowing down or picking up?
So I think, as I said, on the infrastructure, road and these three sectors doing well. But overall, as you rightly said, we saw the growth, degrowth in private consumption, in our economy growth, in GDP growth, etc. And I think this is primarily these are more of transitory, because if you see the monetary policy looks to be more the transmission, monetary transmission looks to be more swifter today, because of the CP rate, etc., which are more in line with that thing. I think the bank lending rates are still a bit of challenging, that the rates are not coming down, and we expect the new policy framework for the MCLR coming from maybe expected from the RBI for the banks to pass on the interest rate benefit. But I think the GDP growth, which has slowed down, is more of transitory because of GST and other issues. And maybe another 2 quarters, and after that, we should be able to come back to the growth era again in our economy.
Devendra Kumar Vyas, thank you very much for joining us this afternoon. So that was the lowdown on the mining and construction sector. We've got more corporate voices joining us this afternoon. PNGRB's proposal, that's the Petroleum and Natural Gas Board regulatory body. A proposal for unified tariff will not impact Petronet LNG, says Prabhat Singh, the chairman and managing director of the gas infrastructure company. He said this while speaking to Bloomberg Queen's Bhanvi Arora. Singh said that the unified tariff regime and the setting up of the national gas grid will lead to better capacity utilization for Petronet. Listen in to what he had to say.
In fact, all this, ma'am, on a very large basis, if you really see across the whole contract period, an advantage of around, on an NPV basis, it will be around 4,000 crores.
Okay. Are you expecting to renegotiate more long-term contracts on lower tariffs?
Actually, as far as Petronet is concerned, we actually have long-term contracts which are only these two. One is the Qatar one and the other is the Gorgon one. So we are kind of done with and sorted. The other contracts are either with the other companies. So if at all there is a need to be negotiated, which I feel it is, I think they would be done by those companies. And whatever experience we have gained in Petronet, if there's any requirement of being able to support from the Indian side, we would be more than happy to do that.
PNGRB's proposal of unified tariff, how will it impact your company?
No, for us, actually, it's not really going to make a difference at all. Reason being that we are running terminals which are by and large capacity utilization. Only fact is that yes, if there is a unified tariff, then there will be more gas consumption. There should be, because, and obviously along with this, I feel that if the national gas grid gets connected, so that will increase the volumes of consumption in India, and thereby it may help further our terminal utilization also.
That was the Chairman and Managing Director of Petronet LNG. Now, India's power companies have a $10 billion problem. Slum dwellers steal electricity and refuse to pay their bills. But Terra Power has come up with an interesting solution in the city of Delhi. The company has hired women living in these slums to go around knocking on their neighbors' doors and persuading them to pay up. Take a look at this Bloomberg video. Well, that's probably the best bill collection record that anyone's been able to strike. 56,000 homes have now become paying homes as opposed to those who steal electricity. More to Nari Shakti, as they say. This is the last one we want to leave you with on lunch this afternoon. Robots may now be after India's low-cost labor. Butler and sorter. These have been built by India's largest warehouse robotics startup, Grey Orange. These help online retailers and logistics firms cut delivery time and costs. Here's Nishant Sharma with that story.
Now, when you make an online purchase, the product is usually kept inside such massive warehouse of among tens of thousands of other kind of products. Now, the entire process is not just time-consuming, but tedious as well. And these jobs are not just done alone by human beings. Startups such as Flipkart, Myntra, Pepperfry and logistic companies like DTDC are using an army of robots by Grey Orange to make the entire process not just efficient, but faster as well.
So Grey Orange is basically a company that makes products and solutions for warehousing and logistics industry. We have multiple product lines that run in different part of warehouses. So, while sortation is a product that handles the packets once they are packed for sorting them into, let's say, Delhi, Bombay in different regions or, according to that. And, another product line, Butler System, basically helps you manage, starting from the order comes to a company to, getting it packed. So it basically automates that part of your picking and storing process. It almost looks like this. Order comes in to this automated warehouse and suddenly a rack appears in front of the person who picks and gives it for packing and gets dispatched. I think the amazing thing that it does is that it makes it possible to ship orders from order to dispatch times in the likes of 20 minutes. So we have seen cases where order has placed at, let's say 4 to 8 p.m. and it was packed at like 4:15, 4:17 p.m. So your order to dispatch times become so low and so real time. That pretty much helps any of these e-commerce companies to give you same day deliveries, next day deliveries. Pretty much the whole ecosystem is going towards real time deliveries. So it pretty much starts helping all of these e-commerce, retail, all players to kind of deliver very fast with a very good accuracy and have bunch of flexibility.
And we have seen like e-commerce giant as Amazon as well. They've acquired a company, they're also doing automation and they're automating their warehouse as well. How your technology is unique and different from all the technologies that have been adopted in the West specifically?
See, there are different aspects of this, right? So one, of course, the technology that we have developed is not only for e-commerce, right? We are doing warehouses for different manufacturing places also, retail companies also. So our technology is not limited to e-commerce, anything like that, right? We have now built a platform of hardware and software with which we are solving problems in retail warehousing space, in e-commerce warehousing space, in spare part handling space, in manufacturing warehouses. So I think instead of building a system for just e-commerce or something like that, our aim always was to build a good platform so that you can make any kind of warehouse really flexible and efficient, and that's pretty much the unique factor that you will see in our systems.
Warehousing started with the boom in the e-commerce space as well. So how has been the reaction from the clients that are?
So I think I would say initially it was tough to kind of get the whole concept through. Normally how in other countries warehousing has gone is manual, then semi-automatic, then automatic, and then to a goods-to-person kind of technology, right? So people would have done handhelds, then people would have done conveyors, and then people would have done bots, right? While in India, India is really famous for leapfrogging, right? So in India, I think we are going from manual to directly a goods-to-person system. So of course it takes time to get the concept through, get that understanding, not only in putting a system up, but for operating as well, right? Having those warehousing managers that can operate a system like this, right? Run an automated warehouse again takes some amount of time for them to understand and get their thinking right to run these kind of warehouses. So of course initially it is a tough part, but I think once people understand the technology, they understand the impact of it, I think then we have seen customers being really aggressive about things.
All right, there are robots coming to steal your jobs. We're going to wrap it up here on Power Lunch. But before we go, here's a quick check on how the markets are doing. Fairly stable since we started the show, about 0.5% or more higher on both the frontline indices. The Nifty Bank having added some green in the last few minutes. And the Nifty Pharmaceutical Index is really the one to watch. Sonfarm leading the charge there. Natco adding handsomely, almost 2% up on that sectoral index. Thanks very much for watching Power Lunch. Stay tuned to Bloomberg Quint for detailed coverage of the monetary policy. We have an extended session of lunch coming up, and you will get to hear from experts and ERA at the RBI on what the Monetary Policy Committee has decided to do. Stay tuned for that.